PMI, or private mortgage. Insurance is required on conventional loans when your down payment is less than 20% of the home's value. And while it does allow you to get a mortgage with a smaller down payment, it does come with an additional cost. So today we're going to talk about what PMI is, when it's required, how long you can expect to pay it, and ways to get rid of it sooner. First up, let's talk about who PMI protects. PMI protects the lender, not you, the borrower, in the event you default on the loan. Now, this allows lenders to offer mortgages to a wider range of borrowers, including those with smaller down payments. But as I mentioned, it does come at an additional cost. So, how long will you pay PMI? Well, the good news is that PMI is not permanent. According to the Consumer Financial Protection Bureau, most mortgages with PMI will pay it for roughly 1 to 2 years. After that, the home's value should appreciate enough that you'll have 20% equity and the PMI will be canceled automatically. Now, if you don't have the standard 30-year mortgage, such as an interest-only loan or a balloon payment loan, then you'll want to check with your lender to see where you stand. Some non-traditional loans may require you to pay PMI for the full life of the loan. Now let's talk about how to get rid of PMI. Once your loan balance is scheduled to reach 80% of the home's original value, you can send a written request to your lender asking them to cancel the PMI. Your lender may require a home appraisal to verify that the home's value has not declined since the mortgage was originated. Making extra mortgage payments is another way to get rid of PMI. By paying more than the scheduled principal and interest each month, you'll pay off your loan faster and reach the 20% equity threshold sooner. A third option is to refinance. If interest rates have fallen or your home's value has increased significantly since you purchased your home, refinancing into a new mortgage with at least 20% equity can help you eliminate PMI. Be sure to factor in closing costs when evaluating whether refinancing makes sense in your situation. And finally, you can get a home reappraisal. If property values in your area have increased since you purchased your home, or if you've made significant home improvements, you may have 20% equity and your PMI should be canceled automatically. You can request a home appraisal to assess the current value of your home, and if the appraisal confirms you have sufficient equity, you can request PMI cancellation. Making home improvements can also help you reach the 20% equity needed to remove PMI. But be strategic in your approach and consult with your lender to discuss which improvements will make the biggest impact. If you have any questions about PMI or want to discuss your specific loan details and requirements for PMI cancellation or removal, be sure to contact your lender. They'll be able to provide you with more information and guidance based on your individual circumstances.